Hi there, welcome back to Market Fatafat. Let's keep it going with all the stocks that are up in a buzz in today's trading session, backed by technicals or news flows. And now on the technicals, we have Rajesh Palviya, Head Technical and Derivative Research at Axis Securities. The first stock that you picked out for us is GSFC, Gujarat State Fertilizers. Give us a sense of where you are seeing this stock headed on the charts, because fundamentally it's been a good time for fertilizers. Technically, what's the outlook over here?
Good afternoon, everyone. So, looking at the setup for GSFC, stock is moving in upsloping channel on the weekly chart. Even if we look at the daily chart, there is an inverse head and shoulder breakout is already taken placed in this counter. So, looking at the chart structure, we believe that this stock can continue furthermore upside. Even in the today's session, there is a surge in volume activity also. So, looking at the buying interest in chemical and fertilizer space, we believe that GSFC can extend its gain. We are projecting target towards 235 to 240 for short-term perspective. So, one can buy this stock with stop loss of 200.
Alright, so that is GSFC on the charts. But moving on to the next counter, which is AU Small Finance Bank. In fact, in an ET Now exclusive, we found out that an overhang may clear for AU Small Finance Bank. There could be some clarity soon that the RBI is expected to respond to its application for the universal banking license. Remember that the application was submitted by AU Small Finance Bank to the RBI in September of 2024. But a couple of things. What does it really mean for us, AU small finance banks? Easier regulatory norms could be there, lower capital adequacy norms, PSL obligations could reduce, and it could improve the growth and the brand positioning for AU Small Finance Bank. On the back of this, AU Small Finance Bank is in focus today. It has given up some of those gains, but nonetheless trading with gains of 0.8%.
Okay, while we are talking about a gainer, on the flip side, let's talk about a loser now, and that's Ola Electric. And this is on the back of multiple block deals that we've seen today. And Ola Electric is a stock that's also in immense pressure today, along with Yes Bank, on the back of block deals today. A 7% cut on Ola Electric as we speak, because Ola Electric has had 3.2% of its equity change hands in 3 bunch trades. We understand that 183.3 million, or rather 18.3 crore shares, which makes up 4.2% total equity of the company, has changed hands on the NSE. This is what the data shows. The names of the buyers and sellers, of course, are not ascertained immediately, and we'll be getting more details on this, along with the buyers and sellers of the Yes Bank block deal post-market hours today in the late evening. So all eyes are going to be on how these stocks react tomorrow, both Yes Bank and Ola, once we have the details of the buyers and sellers. But well, yes, so far what we know is 3 bunch trades have happened. 3.2% equity has changed hands. It's a 7% cut that we're seeing on the stock on the back of these deals.
Alright, moving on then from Ola Electric, that's trading with deep cuts, coming to Vodafone Idea. Rabinder, tell us, there is a brokerage that is maintaining a sell call on Vodafone Idea, so that's also declining away in trade. Take us through the details of the note.
Yes, Kotak Security has come out with a note on Vodafone Idea, and they have maintained their sell rating, but they have cut target price to ₹6, and this Kotak has trimmed EBITDA by 1.9% to 4%, mainly led by a 3 to 4% lower subscriber base for FY26 to 27. And Citi has also come out with a note on Vodafone Idea, where they have maintained their buy rating, but they have cut target price to ₹10, and Nuvama has maintained their hold rating, and they have also cut target price to ₹7.5 as compared to earlier target price of ₹8.5, and ICICI Security has also maintained their hold rating with target price of ₹7. So back of this brokerage's note, stock is in focus, and stock is down more than 3%.
Okay, so deep cuts coming in on Vodafone Idea. We somewhere have reports that also say that Vodafone was talking to the government in terms of some relief, but they don't think that is likely to come through. But we'll get you more on that once we have confirmed details. But Kanishka, coming to you for Indigo, positive news flow coming in for the company. Tell us what it is.
That's right. It's been in focus for quite a few days now. In fact, most recently, it signed an MOU with Delta Airlines, Virgin Atlantic and Air France KLM to build a partnership to connect traffic to Europe and North America. Now, this comes amid the flack it recently received for its ties with Turkish Airlines and the subsequent approval by the DGCA for extension of damp lease of Turkish Airlines planes for only 3 months. Now, Indigo has been in partnership with the Air France, KLM and Virgin Atlantic since 2022, allowing Air France, KLM and Virgin Atlantic passengers to access more than 30 points in India. Now, with the announcements to fly to Manchester and Amsterdam, along with plans to fly to London and Copenhagen in the due course of time, the airline will offer 30 points within Europe on KLM via Amsterdam to the United States and Canada from Amsterdam, with Delta and KLM and flights to the US from Manchester on Virgin Atlantic. Now, following this development yesterday, the stock has been trading almost 1% higher in trade today.
All right, moving on from Interglobe Aviation, the next counter, Concor, is what you picked out for us. Rajesh, tell us, this stock has given some good moves in the last 1 month. It has moved up 14%. So clearly a positive momentum seen for this stock. Where do you see the stock headed from here on?
Yeah, very strong momentum we have witnessed in last couple of weeks, and looking at the momentum now, stock is consolidating near to its 200-day moving average. There is a contracting triangle breakout is already in place on the weekly chart. So pattern indicates that we could see furthermore upside momentum going forward in this counter, and possible target towards 830 to 840 we are projecting on the near term to short term perspective. So Concor one can buy and accumulate with stop loss of 755.
Okay, stop loss of 755 to watch out for on Concor. But Ankita, HCL Tech is the stock that you've picked out for us, and it's not a very good day for IT, but tell us what HCL Tech is up to.
Yeah, HCL Tech, in a global partnership announcement, HCL Tech said it will be working with the UiPath, a global leader in agentic automation. And the goal is to bring intelligent autonomous business processes automation to global clients. Now, the agentic automation refers to smart bots that don't just follow instructions, they learn, make decisions and adapt on their own, minimizing human intervention. So this tech will be deployed across finance, HR operations and IT workflows, enabling large-scale transformations for HCL Tech. So HCL Tech has given up those morning gains, but currently it is still trading in the green. Like you mentioned, not a good day coming in for IT, but it is managing to hold on to a shade of green on the back of this news flow.
Okay, so at least looking good for HCL Tech today, even though it's a minor gain of 0.2%, but here in a market like this, we're going to take it. And let's move on from that and talk about a stock that was doing pretty okay, but let's just check in on it again, and that's Jindal Stainless that we're talking about, because last evening they've announced that the company has acquired a special purpose vehicle to generate 282 megawatts of hybrid renewable energy for the supply of clean energy to its manufacturing plants. The company has acquired a 33.6% stake in the company as on date. The company said that it has invested 79.2 crore rupees in the first tranche of the project, which is expected to be completed by the third quarter of FY26 with the total investment of 132 crore rupees. The company expects the SPV to supply approximately 700 million units of clean energy, which will help to ease the burden on its grids, and the company says that this will significantly reduce its energy costs compared to sourcing power from the grid. So positive news for coming in for Jindal Stainless. In fact, it feels like it's one of the top gainers in the market today, because a 3% uptick is what we're seeing on the stock.
All right, Jindal Stainless up and away 3% in trade. Coming to you, Ravinder, Bioon is the name that you picked out. Tell us what's the news flow here.
Well, as Bioon has received approval in India for its liraglutide drug substance, and its wholly owned subsidiary Bioon Pharma Limited has received approval for its drug product from Drug Controller General of India, and the approval for the generic version of Victoza indicate for the treatment of insufficiently controlled type 2 diabetes mellitus in adults and adolescents and children age of 10 years and above. So back of this, stock is in focus and stock is up approx 1%.
Okay, so good move coming in for Bioon right now. Let's move on from that. And Rajesh, Prestige Estates is the stock that you've picked out for us. Give us a sense on where you think the stock is headed, because we've seen a very sharp correction in the last, let's say, a few quarters. From the more than 2,000 levels on the stock fell all the way to 1,100, 1,200. Then we've seen some recovery coming in on the stock, and especially there's been a run-up post its quarter four numbers last week. Last 3 months itself, the stock is higher by almost 35%. Give us a sense of what lies ahead for this stock.
Yeah, after a significant corrective move, this is the 7th, 8th week consecutive week where the stock is showing good buying interest. And looking at the real estate space, most of the stocks are witnessing good buying since last few days. Looking at the structure of Prestige stage in this recovery now, stock is comfortably holding above 200-day, 200-day moving average, which is a sign of strength on the longer term time frame also. So we believe that till now stock is holding above 1540, 1530 mark. I think we could see further more buying interest to be there in this counter, and possible rally can extend towards 1650 to 1660 kind of zone. So Prestige one can buy and accumulate with stop loss of 1530.
All right, that's Prestige Estate on the charts. Coming to you, Kanishka, Tata Motors is the name that you have picked out. Tell us what's the news flow here?
That's right. Tata Motors is actually expanding its electric vehicle lineup with the launch of Harrier EV today. Now, this new model is Tata's sixth electric offering, following the Tiago EV, Tagore EV, Punch EV, Nexon EV and the Curve EV. Now this talking about the features of Harrier EV, it looks similar to the internal combustion engine, that is the ICE model. However, it carries some EV specific highlights on the front. The Tata Harrier EV is built on a new electric vehicle platform that's called Acti.EV Gen 2. Tata Motors has announced that this new EV will have a dual motor all-wheel drive system, although specific powertrain details are still pending. Now, as we await the launch, the stock has been trading with cuts of about 1% in a negative market trend.
Okay, so that's the take on Tata Motors. Positive news though, but the stock is down about 1% as we speak. But on that note, viewers, we'll slip into a very short break and be right back with more stocks that are in focus just on the other side.
Welcome back. You're tuned into Market Fatafat, where we are taking you through all the buzzes in trade today. Then let's resume then. The next counter in focus today is L&T. Now, L&T is in focus in the fact that the company has said that its water and effluent treatment business vertical has won a significant orders from Public Health Engineering Department of Rajasthan. Now, L&T has classified these orders in the 1,000 crore to 2,500 crore range as significant. Now, L&T said it has won an engineering procurement and construction EPC order for the Rajasthan Rural Water Supply and Fluorosis Mitigation Project Phase 2 Package 1. Now, the scope of work includes supply and installation of 5,251 kilometers transmission and distribution pipelines, construction of 38 ground-level reservoirs with an aggregate capacity of 40 ml, 20 pump houses and 132 overhead service reservoirs with an aggregate capacity of 25 ml. Now, the project aims to meet the demand of water in 285 villages and town, Surajgarh and Udaipurwati in the Jhunjhunu district. And on the back of this big order win coming in, L&T is in focus today. Also, India's infra story is on upward trajectory. That's the word coming in from Matt Autton in interaction with ET. Now, let's go first and hear out why he is so bullish on L&T.
The infrastructure story is incredibly exciting. You come here and see the coastal highway. Between last year and this year, just the tunnel being open, being able to get from where we are in South Mumbai over to here this morning, it's amazing. So there's a lot of companies who are actively involved in this, but L&T is one of the names I've been looking at deeper, just given an incredibly clean balance sheet. But they have not only exposure to Indian infrastructure, but also infrastructure in the GCC, where there's a tremendous amount of capex and development and hydrocarbons, ports, all of that. So that's a really, really interesting play, I think, right now.
Okay, that's the word coming in from Matt Autton, who we interacted with earlier in the day. But Rajesh, coming to you, Fortis Healthcare is the stock that you've picked out for us. We don't talk about this stock a lot, or rather, not a lot of stocks from the healthcare space is what we addressed on this show. Tell us why this has made it to your radar. Last 3 months, almost a 10% uptick. Do you see this sustaining going ahead?
So Fortis is now almost trading near to its all-time high trajectory. The way stock has recovered after a brief correction up to the 600 level, I think the recovery is clearly indicating that now stock is ready to register a new all-time high trajectory very soon. Looking at the structure, stock is moving in the upsloping channel across all time frame. Stock is showing strength. So we expect this stock can extend its gain towards 780 to 820 kind of level on a positional perspective. So Fortis is looking very attractive from healthcare space. Buy and accumulate would be the strategy with stop loss of 680.
All right, so it's Fortis Health on the charts. But coming to you, Kanishka, you picked out BEML for us. Now, this one's up and away 2.5% in trade today. Tell us what's the news flow.
That's right. It actually at its corporate headquarters in Bangalore yesterday. The launch yesterday marked a strategic shift in BEML's operational framework, with the company announcing the complete phase out of diesel-powered vehicles from its fleet. Now, a total of 10 electric cars were flagged off by Shantanu Roy, who's the chairman and managing director of BEML. Apart from that, the management also spoke to ET Now earlier in the day about its robust order book. Now, they aim to complete a backlog of FY25 orders by December 2025 and in fact expect inflows worth 14,000 crore rupees in FY26, with 60% coming from railways, 20% from the defense segment and 20% from the mining segment. Now, against the backdrop of all these developments, the stock, as you mentioned, has been trading 2.5% higher at this point.
Good moves coming in from BEML. We also interacted with their management earlier today and they were sounding very optimistic on the growth outlook going ahead. But let's move on from that and talk about the stock from the railway space, and that's Titagarh Rail. We have a brokerage note coming in on this stock wherein Antique has maintained their buy rating but has cut the target price to 1,095 compared to 1,217 earlier, which is why the stock is under a little bit of a pressure today. For quarter 4, EBITDA margin came in at 10.7% versus the estimate of 11.7%. Net profit also came in at 78 crores, versus the estimate of almost 90 crore rupees. So miss on both the margin and PAT front is what Antique is spotting for this stock. They say that the freight execution is set to improve from June of this year and the PRS segment will also deliver strong growth. Multiple metro orders will help the company scale up its order book, which is robust right now at 11,200 crore rupees, which is 2.9 times TTM revenue visibility. But despite all of this, they have cut their FY26-27 estimates by 3% and 5%, but they continue to maintain a buy rating. Nuvama has also come out with a note wherein they maintain a buy, but they've raised the target price to 1,292 versus 1,197 earlier. So that's the take on from both of these brokerage notes. But well, yes, Antique's note is weighing heavy on the street. Stock trading with cuts of 1.5% almost as we speak.
All right, that's Titagarh Rail trading with cuts of 1.5% in trade. But coming to you, Rajesh, you picked out Phoenix for us. Tell us what do you see on the charts for this counter?
So this is another stock from the real estate space. The way stock is consolidating since last couple of weeks, stock is now forming a contracting triangle formation. And looking at the chart structure, we believe that there is a possibility of breakout on the higher side. As the real estate sector is showing good traction since last couple of days. So we believe that Phoenix is ready to give a breakout above 1630, and once this breakout happens, I think here we can see a rally to unfold towards 1750, even 1800 kind of zone. So Phoenix, one can buy and accumulate in this range with stop loss of 1570.
Okay, that's the take on Phoenix Mills. Ravinder, coming to you. Bata India is the stock that you picked up the last week. Brokerage notes, tell us what the notes say.
Yes, Nuvama has come out with a note on Bata India and they have maintained their reduced rating and cut target price to rupees 1011, and they say that the company's Q4 FY25 performance was weak and they say that the growth yet to reflect back-end efforts. With all the cost optimization in place, and growth remains a key ask for the company. They say the company's plans to extend the ZBM initiative to 300 stores by Q1 FY26, which will cover 45 to 50% of the retail turnover for the company, and with situation on ground remaining similar to earlier quarters. Nuvama has trimmed revenue of Bata India for FY26 to 27 by minus 2.5% to minus 5.3%, and the resilient PAT by minus 3.7% to minus 14.3%. And Goldman Sachs has also come out with a note on Bata India, and they have maintained their sell rating, and they have also cut target price to rupees 1100 as compared to earlier target price of rupees 1190. So back of this brokerage's note, stock is down to more than 2.5%.
All right, so that's why Bata India is in focus on the back of that brokerage note. But moving on to the next counter, RITES is in focus today because the company says that it has emerged as the lowest bidder in a quality cum cost-based selection QCBS, a tender floated by Gujarat Urban Development Company for a project that's worth 28 crores. The tender is for the appointment of a third-party inspection agency for water supply, underground drainage and sewage treatment plant under projects under the Amrit 2.0 schemes managed by the GUDC for urban local bodies of Gujarat. And this project is slated for completion within 60 months from the date of the letter of award or notice to proceed. On the back of that, RITES is in focus today. It has given up those morning gains. It was spike up in the morning, but it is currently trading towards the lowest point of the day. Nonetheless, trading in the green with gains of 0.1%.
Okay, so that's right. In focus on the back of an order win. But Kanishka, coming to you, United Spirits is a stock that you've picked out for us. I believe it's on the back of a very bullish brokerage note. Tell us what it is.
Traded United Spirits from neutral to overweight and has raised the target price to 1,760 rupees from 1,415 rupees earlier, which reflects growing confidence in the company's earnings trajectory. And the brokerage has also increased its FY26 and FY27 EBITDA estimates by 3 and 7% respectively, citing improved margins and a stronger growth outlook in the prestige and above segment. Now, despite the stock being about 7% down year to date, JP Morgan believes that the upward EPS revisions and improving visibility on growth could drive a re-rating going forward. Today, if you look at the stock, it's been trading almost 2% higher.
All right, with that, we've come to an end of this show. It is time to say goodbye. So, Kanishka and Rapinder, thank you so much for taking the time out. Thank you so much for joining us today. But with that, it's a wrap on this edition of Market Fatafat. Snehi and I will take your leave. Thank you so much for tuning in. Don't go anywhere. Market action continues on ET Now.